Traders, we are in a different market than where we were 60 days ago. The Iran conflict has now escalated to a Strait of Hormuz blockade. Oil is up over 17% in weeks. The S&P just put in fresh new 2026 lows, and we've got a Fed decision on deck this week. This is not the environment where you're pressing longs on every dip, hoping the market snaps back. The internals are slightly deteriorating. Tech is still chopping, and energy and defense are the only real tailwinds right now. This week, I'm going to go over the S&P 500, the NASDAQ key levels you need to be watching, breaking down energy and defense setups that are still in play, and flagging what's not actionable in the tech basket. So looking forward, just looking at the S&P 500, this is the cash index. You can see I've had levels here. It's basically how many times it was tested, right? It held this 6,800 to 6,775 level. That came back into it and got rejected at a now declining 8 EMA. Prior level, this low here was another level I was watching. We undercut that. That was a very strong undercut of these lows, and it closed very strong. However, 2 days after chopping sideways, it got smoked. On Thursday, Friday, it closed down. And so if we didn't have oil acting the way that it is, I think this would have been very nice for maybe a undercut and rally. But however, oil and the overall global backdrop is dragging things down. So what does that really mean? The Iran Strait of Hormuz, so it's a full blockade now, and now is the base case that not a tail risk. So the IEA's largest ever emergency stockpile release failed to cool prices. Crude is still elevated. That's the market telling you something. Supply disruption is still structural this week, so it's not really a headline spike anymore. Crude spiked and now prices are actually holding. It has not fallen out of bed. So Hormuz inflation is kind of the new narrative. This isn't just an oil story. Fertilizers, semiconductors, specialty chemicals, everything that touches tanker routes through the strait is getting repriced. That's stagflationary. So be mindful of that word this week, stagflation. It's not just energy bulls talking about it anymore. Fed rate cut outlooks is again on Wednesday, is the event markets are kind of watching the Fed closely this week, not because anyone expects a cut, but we need to listen to see what Jerome Powell is saying. If he's hawkish against a backdrop of rising oil and slowing growth, that's a risk-off accelerant. If he signals patience, you might get a relief bounce, but I wouldn't be chasing that, honestly, especially with how this looks. The NASDAQ, if you look here, it's also not doing anything. If we want to go back to, well, firstly, you can see that this here is acting as support, and it's at that support level right now. However, it's, how many times can it really tag it? It can undercut these lows and get bounced back up, undercut the lows, bounce back up. But this time, we're near the 200 EMA. I think we're heading lower this upcoming week. 23,855 and 35 is kind of my target. It's basically this low here. It retested the breakout here on November 21st of 2025. So we want to be mindful of these. So the market internals, they are confirming a potential breakdown in the S&P 500 with new 2026 lows. The Dow, NASDAQ, they're both rolling over week. Breadth is narrowing. This isn't really a healthy dip buying setup. So the post-COVID bull phase that ran 3 consecutive years of double-digit returns, that engine seems like it's actually kind of losing steam, and the market is expensive historically. So valuations at 25-year highs going into an oil shock in a Fed meeting is not necessarily the setup you want to be in for aggressive long-term exposure. Okay, so really, where do you want to be? You want to be in energy at this point in time. So we're going to start off there. I'll just start off at ExxonMobil. So energy, this is the place you want to be watching. The setup is real. Iran conflict, the Hormuz blockade, the IEA stockpile release, which failed to bring prices down. That's a bullish signal for energy equities. This isn't necessarily chasing. The macro thesis is intact and strengthening at this point in time. So if we want to look up at ExxonMobil. It's already up 44% over the trailing year. The question is, well, really, I got 30% here. Either way, the question is whether there's still risk reward here or if you're late arrival. So don't necessarily be a bag holder chasing a name that's already extended. Wait for the pullback to a clean level is typically a good rule of thumb to go by. However, you can see that ExxonMobil has really been basing and chopping around since early mid February. And now so it's been basically about a month. It's been chopping around. It tagged the 21 EMA. This was an obvious level to risk against here. And now, it's going back up. We got 3 green days in a row. Maybe I can see it coming back down and pulling into, if you want to go on a shorter time frame here, pulling into probably the 8 EMA, maybe giving half of these gains back. So I'd watch 152. I'm still in this from 150.70. My stop loss was 147.33, just below this low here. Actually, no, it was at the 3-day pivot at that point in time. Either way, so I'm still in this. I'm still holding it. It's working nicely so far. Either way, I would look for a breakout in ExxonMobil this upcoming week. And a potential continuing on trending. CBX, it's a similar setup. However, this actually has been moving a little bit better. It chopped sideways basically for, I don't know, a week and a half or so, broke out, and now the continuation looks like it has a good potential to actually continue to do so. So CBX looks pretty solid. Let's go over Halliburton. Halliburton is kind of lagging right now. It's chopping. It's coming into the 50 EMA. So this isn't necessarily somewhere I would put too much attention towards. However, if you are a support play, an area I think that you could potentially risk against is look at these price bars here where price is constantly tagging and then being bought. It's kind of at that area. So I think this area, if you buy within this zone, this 3380 to 3320 area, it's at the 50 EMA. It's at prior support. It has potential to be support now, and then maybe risk somewhere down here like 3250. That could be a potential good play coming in. VLO. Now, refineries, they're rocking it right now. This is a beautiful pullback, price correction to the 8 EMA. I've had alerts set on this. You can see them here. I missed this entry here. I was looking for it, but I missed it during my workday. It was a beautiful pullback to the 8 EMA. Trend line was broken, and now it's making higher highs. I would look for a higher low to be set. What we can do is put an anchored VWAP at this pullback low and see the area of interest, which is actually, it's kind of pretty close to it actually. So I would be mindful of VLO going into the week. Looks pretty darn good to continue on. MPC, another weekly chart here, continues to break out, continues to run. It's at a level of interest right now, so it's breaking out of this short-term consolidation. It trended to the 8 EMA. It popped. Now it's pulling back. What we want to look for is a higher low versus this low right here. So an area of interest where you can potentially be ready for a pullback is the anchor VWAP from that low, which is actually where it's at right now. I do have a pivot on gap, so this is basically the average participant from this day using pivot calculations. And the price wasn't touched following day, right? So this area is actually interesting to me, 225 to 221.52. I'm looking for this area to hold. It's got confluence with the 8 EMA as well. So MPC might actually have a pretty decent setup as well. LNG, shorter time frame. Actually, let's look at the weekly first. It had an inside week last week. I would think this has had a pretty monster move. If we look at percentage wise from these lows over 12 weeks, so 3 months, has made a 40% move. I think it might be time for a little bit of at least some rest. It has been resting here over the past few weeks, chopping sideways. This isn't on top of my list. It has good potential, but I think it just needs some rest overall. KMI, this looked like a pretty good setup in my opinion. Pullback to 21 EMA. It popped. looking at the shorter time frame, you can see this downtrend line here popped, and now it's retesting. So KMI actually looks pretty good moving into the week as well. Now, the defense sector, the tailwind is still intact. The U.S.-Israel combined forces is escalating operations against Iranian infrastructure. A marine unit is being deployed to the region. This is not de-escalating. It's really only just extending. So defensive names are pricing in prolonged conflict, not a 72-hour resolution. So let's look at defense names, such as Lockheed Martin. I did take a trade on this last week. It did not work. Or no, I'm sorry, I did not. I was prepared for a trade. My trade was an LMT, either or RTX. Sorry, RTX. Either way, did not work. Basically, what I was looking for here was a breakout, and then it pulls back into a retest, and it pulled back a little deeper than what I wanted, and it popped back out, but obviously it continued to fail. So until LMT breaks this choppy, sloppy range, I don't know if we can really, I don't think it's really worth paying attention to. NOC, basically the same thing. It's kind of messy. It's not clean. You guys can, you can draw a downtrend line if you really wanted to here. We can go at a shorter time frame, looking at the 65-minute. We're making higher highs and higher lows on a longer term frame, but on a 65-minute chart, it's just chopping around right now. It's making lower highs and lower lows. Maybe from this anchor VWAP, yeah. See, even the average participant is in the red from that low. So NOC, not really a top contender at the moment. I mean, you could actually, what I'm going to do is I'm going to set an alert at around this low to watch what price does here. And if price comes in, undercuts this low of the 12th of March, so that was Thursday, and then comes back in, that might be a pretty good area to risk against. This is another pivot on gap here, the 72 723.27 by 721.05. That's an area of interest as well. GE is another one that is kind of in the defensive, but has been getting absolutely hit. I'm not sure why, but it does look like the 200 EMA is intact. I'm not interested in that. And then here's RTX. I bought into RTX on, I think it was Tuesday, and I was out by Thursday. Pretty tight stop loss. I was basically risking against the breakout and then the retest. It failed to continue on. So, but looking at the 65-minute chart, it's still holding where it needs to hold. It's just not clean. So even though the defensive tailwinds are there, the charts and these names are not acting cleanly. Maybe that shapes up for this week, but I think your energy should be spent in energy, pun intended. So overall, again, the tech sector, it's still not the place to be. So we can look at Nvidia real quick. Nvidia's GTC starts Monday. So Jensen Wang is on stage. Blackwell pipeline, next gen chip roadmap, AI factories. They're going to be talking about it all. Historically, Nvidia has gotten a lift from the GTC 3 out of the last 4 years. That's real. But here's the context. We're still sitting at 2026 market lows. NASDAQ is still in a downtrend short term. And oil shock, stagflation narrative is the dominant macro theme this week. And tech is just not the place to be. So yeah, you might be able to get a little pop if you're in this, but looking at the chart, it's super sloppy. What do you do with this? The 200 EMA is here. It's probably going back down to it. You can't trade this stuff. At least not swing trade it. Otherwise, if you're trying to catch these things, buying the dip, you're getting sliced up like an onion, and you're tearing up because it's making you cry. So overall, tech is chopping. It's, until the 50 EMA starts acting as support, the 200 EMA is going to be target, really. So we can just scan tech, but real quick, tech is not the place to be. 200 EMA down, 50 EMA down here in Microsoft. The 8 couldn't even get over the 21 here, consolidated, and now the average participant is below the anchor VWAPs from this low. So the average participant from this point in time is now in the red. Shorts are again they're feeling the heat. I'm sorry, longs are feeling the heat. Shorts are feeling happy right now. So this was an area that was pretty important. I marked out here. It failed to hold it downtrend line and just broke on Friday. Nvidia, nothing to see here. Apple, there's a lot of demand for Apple products right now, specifically because of AI. But what is the overall market context? The overall market context is not growth. It is not tech right now. And so Apple, that continues to just set lower highs and lower lows. Doesn't look good. It's probably going to retest this low here. Probably, what is that? 22.43.42. That's probably in store. Amazon, nothing to see here. Broadcom, just a chop fest. Meta looks absolutely terrible. This is probably going to go retest this 582. Actually looks like a decent short this week. Netflix, I was looking for an area to short in, but I missed it at the 200 EMA tag. You can see I had the alert here. I just wasn't able to get in at work, so the risk reward was off by the time. But what I do have is this yellow line. This is the anchor VWAP from news, from that gap up about Warner Brothers. And so the average participant from that gap up is now underwater. So shorts are happy, longs are feeling the pressure. Tesla chopping around at prior support, probably breaks it with the overall macro view of things. Google bouncing weak off of this prior support. 300 continues to be an obvious level of support, but this might head down to 200 EMA, potentially 268. I wouldn't be shocked. Downtrend line broken, but it looks like it's going to be headed lower. So I would really watch for this low right here, 294.08. CrowdStrike, this has actually been getting some love from the war. Basically defenses, software defense. That's why this is popping. I think this is going to get hit, especially, if this is coming from the war, all it takes is the war to resolve and this will dissolve. That's what I kind of think, especially long-term AI software. I think it's an abundant theme. Hardware is the place to be. ServiceNow downtrending, right? PLTR is kind of like a pretty interesting tension trade where it's still tech, and tech is not the place to be. However, the war is kind of propping it up right now because of the government contracts that they have. And so this is an interesting tension play. I'm not super interested in it just simply because of the overall context. Again, the overall market view is much more going on than just the war. So if the war resolves, I think this also dissolves, or at least, has a little pullback. Hood doesn't look good. This looks like it's heading lower as well, at least maybe a retest. Honestly, all these names, they could be chopping around, but until they actually do something, there's nothing to do. Micron, this just continues to chop around in a range. In times like this is where you need to pay attention to relative strength. This is a relative strength name. This low right here was undercut and it rallied. It was an absolute beautiful undercut and rally. So Micron looks interesting. However, it's not that interesting. It's interesting when the market turns around. It's not interesting now because it's chopping in range. It's not doing anything. AMD, this looks like it might fall and break through here. So I would be mindful of that. This is a support area that continues to get supported. Sellers continue to assist in making lower highs, and so pressure just comes in early and earlier. That's where you're kind of getting this descending triangle price action here. So just be mindful of that. TSM doesn't look good either. It's at the 50 EMA, could get a bounce off of it, but you got an 8 and 21 cross right here. If you pay attention to that stuff, it's downtrending. Overall, this market, especially tech, again, tech does not look that good. So just stay away from it. That's my opinion. If you can day trade it all you want. If you want, you can try and swing trade it and get chopped up to pieces. That's fine. That's your prerogative. But what I'm trying to do here is help to show you where you need to be. You can see MSTR coin, not a place to be. IBM had a nice little pop after getting crushed. Looks like it's going lower. We already went over defensive energy. I'm going to skip through that. UPS, this looks like it's headed lower. Again, shipping freight straight at Hormuz, right? It's blocked down. So this is why this is also getting hit. And this looks like it's probably heading to 91. So this could be a nice short coming up this week. FDX, same thing, shipping, freight, things like that, insurance. It's at the 50 EMA. It bounced off of it. Looks like it's coming back down to a retag. We got a 8 and 21 cross here on Wednesday. If you pay attention to that stuff, it looks like it might come back down to a retest. We do have a gap fill potential here at 335.95, so be mindful of that. And then last but not least, CME. One correlation to be mindful of, excuse me, I had to drink my coffee, is to when market is red, this is typically green. You can see it bounced near the 50 EMA. Where did it bounce to? The anchor VWAP from the all-time high here. And so which is where it failed here, 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 and here. So until something happens, I do have an anchor VWAP from the low here. We can be watching for a pinch. So it'll fill in here as the lines come up. Oh, man. As the lines come up, and then I'm basically looking for something like that. And this anchor VWAP to flatten out. Okay, it's going to come, it's going to flatten out, go here, and price is going to beat bop around in here, break out, come back and retest, and then it'll continue back higher. So that is one scenario I'm looking for. The stop loss would go somewhere underneath this low, or if you're a little bit more conservative, you can put it underneath that anchor VWAP from that low. So, all right, that's kind of the recap, okay? That's the overview of everything. Where to be. I think this week is energy. We do have, again, news on Wednesday for the rate cut. We have some earnings this week. Okay, looking at earnings week of March 16th, we have Dollar Tree. I don't think that's going to move the market too much. SMTC for you tech people out there as well. We don't really, Micron's an important one Wednesday after the close. Planet Labs for those of you that watch that stuff. So we do have some earnings coming up this week, but nothing that would significantly move the markets. If I'm wrong, let me know. Oh, OKLO, that would be an important one as well. So again, just be mindful. Geopolitical catalyst monitoring. The Strait of Hormuz situation is fluid day by day. Trump's threat towards everyone is he can just tweet out at any point in time. So just be mindful. Don't go chasing headlines. Look at the large macro view of things, and always manage your risk. We don't need to be just randomly buying things because we see green candles, because as we see, things can sharply turn around. All right. So again, manage your risk, know your levels, and don't let the noise force you into a trade that does not have a setup, especially your setup. Trade safe. Hopefully this is valuable. Like, subscribe. We'll see you next week.